This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices slipped slightly on Tuesday after rebounding more than 7% over the previous 3 sessions on supply concerns prompted by fears of widening Middle East conflict and a potential shutdown of most of Libya's oil fields. Brent crude futures were down 36 cents, or 0.4%, at $81.07 a barrel by 11:30 GMT. U.S. West Texas Intermediate crude futures dropped 40 cents, or 0.5%, to $77.02. After the jump in oil prices on the back of geopolitical risk in the Middle East and a production halt in Libya, market participants are now holding back to assess further developments, said IG market strategist Yeep Jun Rong.
Dutch and British wholesale gas prices rose on Tuesday afternoon on supply concerns raised by an extended outage at an Australian LNG plant and geopolitical risk, though strong storage inventories are limiting the upside. The benchmark front-month contract at the Dutch TTF hub was up 1.53 euros at 38.08 euros per megawatt-hour, MWH, or $12.50 per MMBTU, by 11:55 GMT, LSEG data showed. Train 2 at Uttages LNG is scheduled to be restarted in October, operator Inpex Corp 1605, T said on Tuesday. The production train at the plant in Darwin, Australia, was halted on August 20th and is its second train outage in the past month.
Moving on to the top news in the energy sector.
U.S. Customs and Border Protection has detained nearly $43 million in shipments of electronics equipment from India since October under a 2022 law banning goods made with forced labor, according to agency data, representing a new focus for the Trade Enforcement Agency. While CBP does not specify what types of electronic equipment it has detained, polysilicon, a raw material in solar panels, is identified as a high-priority sector in the Uyghur Forced Labor Prevention Act, and solar panels have historically made up most of the stopped shipments in that category, according to industry sources. The law bans goods made in China's Xinjiang region, where Chinese authorities are reported to have established labor camps for ethnic Uyghur and other Muslim groups.
Security services from 7 European countries on Monday briefed Norwegian energy executives and officials, including from Equinor, Europe's largest gas supplier, about what they see as Russian threats to critical infrastructure. The closed-door meeting, attended by national security services from Norway, Germany, Belgium, the Netherlands, Finland, Sweden and Iceland, highlighted Norway's role as the key energy supplier to Europe. We see a developing story which addresses not only Germany or Norwegian colleagues but all of us, Sinan Selen, the Vice President of Germany's Federal Office for the Protection of the Constitution, told Reuters after the meeting. Next, we have the top news in metal markets. China's net gold imports via Hong Kong in July rose by about 17% from June, Hong Kong's Census and Statistics Department data showed on Tuesday. The world's top gold consumer imported a net 25.659 metric tons in July, up from 21.919 tons in June, the data showed. Total gold imports via Hong Kong were up over 6% at 31.457 metric tons.
Copper prices rose to their highest in nearly 6 weeks on Tuesday, with buying triggered by expectations of an imminent interest rate cut in the United States, a weaker dollar and signs of improving demand in top consumer China. Benchmark copper on the London Metal Exchange was up 1.1% at $9,389 a metric ton by 0954 GMT after touching $9,418 for the highest level since July 18. Interest rate cuts by the U.S. Federal Reserve would boost U.S. growth and demand but would also apply pressure on the nation's currency, making dollar-priced metals cheaper for holders of other currencies. The Fed meets over September 17-18.
We will now look at the top news in the agricultural sector.
Chicago corn futures fell for a 4th consecutive session on Tuesday, trading near the 4-year low hit the previous day on expectations of record U.S. production and sales of old crop supplies by farmers. Prices of soybeans and wheat were subdued by plentiful supplies, with one Singapore-based trader pointing to the Northern Hemisphere harvest, particularly from the Black Sea region. The most active corn contract on the Chicago Board of Trade was down 0.3% at 3.85 minus 1/4 a bushel at 0259 GMT, having earlier equaled Monday's 4-year low of $3.85. Corn has shed more than 3% in the past week.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.